SoFi, oh SoFi, what a roller coaster ride it's been, man. Holy smokes. SoFi's up around 1.3% today. It's at $15.40 after being at over $17 per share yesterday. And I'm sure you guys saw we got the Fed funds decision from the Federal Reserve, and that caused the stock market to collapse, SoFi included. So guys, cheers. I appreciate you all for tuning in. We're going to break down SoFi, the charts, what I'm looking to do. You guys know the drill, but first, hit that like button. Don't forget to subscribe and get your free stocks for Moomoo. Once you open up your account and deposit at least $100, you get 5 free stocks. Deposit at least $1,000, you get 10 more free stocks, and overall, your uninvested cash for now will earn up to 8.1% APY. So guys, use that link down below or go to stocksurfest.com/Moomoo. Get your free stocks. And with that being said, cheers. Let's get into it. And by the way, I appreciate you guys for tuning in. We just crossed over 46,000 subscribers, and we're getting closer and closer to 50,000. So check it out. SoFi, you guys know at this point, it's been pretty volatile. Now we're up around 1%, not bad. Trading at $15.40. But yesterday, man, it was not pretty. This thing collapsed after we got news that the Fed is not planning to cut rates as aggressively as previously expected in 2025. They were previously expecting 1 full percentage point cut in 2025, but now they're expecting half of that, 50 basis points of a cut, which will put us, I think, in the range of, is it 3.5 to 3.75, or maybe it's 3.75 to 4. Either way, that's where the Fed funds rate currently is projected to be at by the end of 2025. So that caused the stock market to fall because, well, the stock market likes rate cuts, and the Fed adjusted their guidance, which that spooked the stock market in the short term. And yeah, less rate cuts than expected caused the sell-off. But at this point, guys, we're actually rebounding. All indexes are in the green. SoFi looks like we're pushing up now 1.7%. We're holding the low from yesterday, which is good. So at this point, man, I think the sell-off was a little bit overextended yesterday, not only in SoFi, but the entire stock market. I think it was a bit of an overreaction. I mean, guys, the Fed has cut rates 1 percentage point since September. And the last thing you want is for inflation to come back soaring, right? Nobody wants that. So I'm in the camp, and I think you should be as well, of the Fed not, aggressively cutting rates. We don't want that. We don't want that. I mean, the last thing we want is inflation to come back. And with Trump coming in, tariffs, there's a lot of inflationary pressures with him coming into office, potentially. We'll see how that pans out. But, yeah, I think it was an overreaction overall. And SoFi, like I said, is holding the lows from yesterday, which we hit $14.93 yesterday. Now we're at about $15.50. Now we're up almost 2%. The stock's rallying as I'm making this video on the intraday. You guys can see we opened up $15.70, got to about $16, then we sold off to $15.10. That was about an hour ago. And now, 11:30 a.m. East Coast time, almost noon. We have been rallying, making some higher highs, higher lows here on the intraday. This would be ideal for SoFi if it continued to rally for the rest of the day, guys, into close. That'd be ideal, especially if we broke back over 16 into the low mid 16s. That'd be huge for the bulls. But overall, at this point, we are holding the lows from yesterday, but overall, guys, we are still down almost $2 from the recent 1733 high, or about 10%. So we're in correction territory right now on SoFi stock, and personally, I'm not buying this dip, to be honest. My average cost is $680 or whatever it is. $680. So we're at $15.50. I'm not looking to average up at this point, but if it were to slip somehow to 13, 12, okay, that is where I'd be considering. That's where I'd consider adding a little more. But for now, I'm just simply holding. And another thing worth mentioning on this 30-minute chart, SoFi is holding support. We can see here at $15.15 roughly. That was the low from the beginning of this month of December up until pretty much just about a week ago. So we're holding there, putting in a double bottom even. Now you guys can see it on this 30-minute chart. That's actually looking like a double bottom, is it not? So we're putting in this double bottom. Let's see if we follow it with a full-on breakout. I mean, that could happen. It really could, but we have to wait for the confirmation. You guys can see here on the 4-hour chart, this still looks really good. We're above the 180 SMA, which has held for months. You guys know at this point, throughout this entire uptrend, it's held for months. I mean, since it looks like the middle of August. Yeah, so about 4 months, we've been riding this 180 SMA. Each time it's pulled down, buyers have come in, and they've been waiting to catch SoFi right in their laps, and then boom, ride it back up. So that's what we're seeing right now. You know, not necessarily getting the pop quite yet, but we're noticing the double bottom. Are we not? Going back to that 5-day, 5-minute, we're noticing the double bottom, but let's now wait for the confirmation of a breakout. We're not quite yet getting that, but overall, you guys got to realize on this 4-hour chart, this is where buyers have come in. 180 SMA, which we're at it pretty much right now. So what do you guys think? Let me know your thoughts in the comments. I'm actually very curious where your head's at overall, and make sure to join the email list. Almost forgot to mention it, guys, before we break down some other stocks here. Join that email list. I'm sending out my top 3 stocks every single Monday for free right to your email, and it's a quick read, guys. Couple minutes, nothing crazy. All you have to do is put your first name and your email using that link in the description box down below. So yeah, go check that out. So yeah, the entire stock market right now is moving. The Dow's up 0.6%, looking pretty good here. If I pull the Dow up, buyers are coming in a bit here, getting a bit of a relief rally after yesterday's bloodbath. That makes sense. So Dow's up over 0.5%. Let's see here. SPY, S&P 500, it's up around 0.7. It looks like we are holding above the lows from around a month ago. Middle of November, we held about 583 to 585. We're bouncing off of that right now, which is good. On QQQ, we're seeing clear buying pressure coming in above this 180 SMA on the 4-hour chart. You guys see that? So this could easily be a continuation play. And if you're in the camp that you think, okay, stocks are going to rebound beautifully, this is just a little pullback. One way that you can play that, and I'm not doing this personally yet, but you could look at leveraged ETFs. You know, I trade these from time to time. I'm sure a lot of you guys do as well. So TQQQ could be a way to play the QQQ rebound, which I don't know. I mean, we're getting into the end of the year, going to head into the new year now, so things might get a bit wonky. So that is a bit risky, you know, heading into the holiday week, especially next week. Anything could happen, so this might be a bit more risky, especially considering now we're wrapping up the year, holiday week. Stocks get interesting during these times, but either way, heading into the new year, I'm watching this on the dip. It's a 3x leveraged ETF, TQQQ. It goes up 3 times what QQQ goes up. So let's say QQQ goes up 2-3%, or maybe it has a big week. It goes up 5% in a week or something, a big rebound, right? This would go up, give or take a little, but about 15% if QQQ went up 5%, because again, it's a 3x leveraged ETF. So if you think we're going to bounce back, which I think there's a good chance we do that, you know, maybe it takes us to get into January for it to fully happen. We'll see. But if you think we're going to bounce back, TQQQ is interesting. But of course, with a leveraged ETF, guys, It's risky. You got to do your own research and realize these are not meant for long-term holds. They're only for trading. Quick little moves. Maybe you hold it for a couple of days if you want. But yeah, they're not meant for long-term holds, these leveraged ETFs, right? So let me know your thoughts in the comments. Hit the like button. Don't forget to subscribe. Check out the Patreon if you want to keep up with what I'm doing in my portfolio every single week. That's linked down below. And do not forget to get your free stocks for Moomoo. Open up your account and deposit at least $100. You get 5 free stocks. Deposit at least $1,000. You get 10 more free stocks. And overall, your uninvested cash for now will earn up to 8.1%, guys, APY, which it's a no-brainer. So again, check out the link down below or go to stocksurfest.com/Moomoo. And with that being said, cheers. I'll catch you guys in the next video.